Today we are talking about a very polarizing company, and that is going to be SoFi. Some people love this. It has a cult-like following in some trading circles. Other people hate it and say it is the next scam SPAC that's going to zero. So I'm going to be talking about SoFi, what I think of it at its current price, what I think of the company as it's been growing. We're not going to get into all of the deep, dark depths of company analysis and security analysis, but I'm going to give you a slight overview of some of those things like revenue, cash, debt. We're going to talk about that stuff. I'm not going to go super deep because I want to keep this surface level enough to be understood by most of the people who are watching this. So, the question we're trying to answer today is SoFi a generational investment opportunity? Is this a name that in 5, 10, 15, 20, 50 years you're going to be looking back on and being like, wow, 2020 to 2025 was really the entry opportunity on SoFi, and this thing has become a tech giant now? That is the question we're trying to answer, yes or no. And by the end of it, hopefully you guys will have a better idea of that answer. Let's look at the chart. That's where we're going to start here. I have the black line where we de-SPAC'd, or where the SPAC was hanging out, about $10, $10.50, in that range. And you can see since 2023, we've rejected that level multiple times. This stock is having trouble getting above that SPAC level. We've created higher lows since the end of 2022. You can see right here where my cursor is, end of 2022, we created a low, a higher low in May of 2023, another higher low at the end of 2023, and then we're trying to create one, but we're kind of struggling to create one at current day, current price. Those higher lows are nice. The volume we're seeing here, it's been favoring bears in 2024, but the volume is declining. These peaks are getting smaller for the bears, so selling is easing a bit. We can see on this weekly chart here as well. We've had multiple weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks in this small range. So selling is slowing. The volume is declining. It's not a bad sign for bulls, but this chart in general is pretty 50-50. The higher lows, a little bit bullish. Inability to get above 1050, a little bit bearish. Bearish volume, but it's declining. So it's 50-50 in my opinion. We're going to move on to some fundamental side of things, just some trackers that you can see on Finviz if you were to search SoFi on Finviz. So the income, negative. Sales, 3.2 billion with a market cap of 7.18 billion. Not bad. Book per share is sitting at 5.51. Current price is up in that 6.8 area, so we're not too far above book. Cash per share, 4.37. The biggest green flag I see here is that our price to cash is 1.55. That is a very, very solid sign in my opinion. I do like the fact that they have that amount of cash and that we're trading very, very slightly above our cash per share. That's a good sign, and it makes me feel good about maybe taking an investment starter down here. We can look at the EPS over here. We're seeing a lot of green, large numbers, large growth here on the EPS. EPS next year, EPS next 5 years, EPS past 5 years. Those are good signs here as a growth kind of tracker on SoFi. Those are good signs. I also put the EPS trend down here from macro trend, which we're going to get into some other charts from macro trend here soon. But the EPS trend here, it looks good. You can see back, I believe this is in the 2020, 2021 area. We were pretty negative. We were getting down near that, minus $3. We popped up above 0, and since then we've been kind of consolidating, getting closer to that even level, and actually holding up near that level, which is a good sign. We like to see stocks that are unprofitable and companies that are unprofitable make those moves toward profitability with a slow and strong trend. So we're seeing that over the past 1, 2, 3, 4, 5, 6 EPS candles. This is just a quick overview. I'm not going to go into exactly what SoFi is because it's a pretty simple to understand on the surface level company. It's an online bank that gives you basically a place where you can manage your money, invest your money, get loans, work on your debt, that sort of stuff, but it is fully online. So it's kind of that tech side of the banking industry. We have the brick and mortar, the I go and I deposit this cash or deposit these coins or deposit my check at a branch. That's not SoFi. SoFi is on your phone investing, getting high yield stuff, making sure that you can get loans, making sure that you have a decent plan for your debt. And if you want to read all these things on this slide here, then pause the video now. I do want to talk about the CEO, Anthony Noto. He's the CEO, and I'm going to read this up here. He serves on its board of directors. Before joining SoFi, he was the COO of Twitter and a CFO when he joined the company in July of 2014. Prior to Twitter, he served for almost 4 years as the co-head of global TMT investment banking at Goldman Sachs. He joined Goldman Sachs in 1999 and was named partner in 2004. So he has ties. He worked for Twitter and he worked for Goldman Sachs. He knows the banking industry. He knows the financial industry. That's a very, very important thing. And I think it bodes well for SoFi long term here. Quickly, I want to go over the SoFi philosophy. So they want to attack your debt with a plan. Always have a safety net, put your money to work, and then save for retirement and other goals. So they're promoting pretty good financial ideas for individuals. They're promoting things that individuals should be doing, and they're also giving you the tools to do those on your phone. That's the biggest thing. Calling a bank, going to a bank, it's not really a thing that young people do. Older people, all the time. Older people, with respect to anyone who's older, are not going to live as long as the young people that we have right now who want all of this on their phone. So this is kind of a future-looking company. It's kind of one of those you buy now, and as younger people kind of explode into this technological world. Sorry, words are hard sometimes. But this tech world that we're shifting towards, young people are going to completely embrace that. And SoFi is kind of giving them an easier banking opportunity on their phones. So that's kind of what I'm seeing as SoFi being a potential play of the tech future that we're moving towards. Now we're getting into things that I think are the bull case for SoFi. First one is going to be its revenue and the growth that we are seeing here. We are stair-stepping on this. Look at this chart. There's nothing bad about this chart at all. SoFi is growing. SoFi is growing fast. That's what you can take from this chart here. SoFi is moving. They are growing. They're making smart business decisions that are increasing their revenue consistently. This is exactly what we want to see on a company that's moving towards that even on EPS and income, because we're about to talk about income. When we're moving towards becoming a profitable company, this is what you want to see when you look up revenue. This is exactly what you'd like to see. Net income. So this is where we're talking about an unprofitable company turning into a profitable company. You can see, we were pretty negative a couple of years ago. We started to move towards positive, small setback, and now we're moving back again towards positive. This is a good sign. We're moving towards becoming a profitable company overall. Year over year, a profitable company. I do want to address this small spike here. I consider that a recovery opportunity for SoFi. So this, we got this spike and then they recovered from that. I think that's a bullish point for SoFi. The fact that they were able to recover from that net income slip up and continue to move towards that positive side of the net income. Another thing that I want to just bring to your guys' attention as an investor or a trader is when companies are finally able to sustain profitability, usually larger players are much more willing to get into these names. There's a lot of people who invest, a lot of hedge funds that don't like to get their feet wet with unprofitable companies. Once a company starts to show that they can make money, that's when these people are going to jump in, buy the price up, put loads of money in, enough money to have to file to tell the public that they're buying, that's when those people are going to be buying names, is when they're finally profitable and they show that they're able to make money. So as we move towards that positive income, profitability, there's going to be more people piling into this. So essentially, you get in as it's flipping to profitability. That's kind of something that I've tried to do in the past and it's worked out well, is when something is flipping and becoming profitable, that's usually a decent time to get in if you believe that that company is going to continue to grow. So let's move on here past our net income. Members, another sign of growth. You know, when we're looking at big companies, you're always looking at how many people are using their products, how many people are, subscribing to Netflix, how many people are going to Starbucks. It doesn't change for SoFi. How many people are using SoFi? How many people are using their services? In 2020, this is in thousands, but in 2020, quarter one, 1,000. Quarter one, 2024, 8,000. And that's in thousands, remember. That is a massive increase. In 4 years, that is a massive increase. I personally know some people who use SoFi, and they have nothing but awesome things to say about SoFi. I think that's going to continue to grow. I don't see this slowing down. Again, this is a business with a forward-thinking leader and a forward-looking product. They're looking at over 5 years, we're going to continue to grow this thing. We're going to get the young people. We're going to get the people who don't want to go to a bank. We're going to get the people who want to save the time of going to a bank and do it online. And they're successfully doing that. They're successfully tapping into that market, and they're growing fast. Typically, banks are not this fast growing. Typically, banks are not, growing members, revenue, but this is unprofitable. So there's a little bit of a catch there. But typically, we're not seeing this growth in banks. That's why I'm thinking this is going to be a long-term option for banking. I don't think this is going to fail. I don't think this is going to go away anytime soon. The growth here, astonishing and very, very promising. Very, very promising. This right here might be my favorite thing about SoFi, is their ability to add new members. What's the number one way to grow a business? Attract new people. Attract new people. All right, that's all I've got to say about members. The debt. Let's talk about the debt. So SoFi, people always want to invest in things that handle their debt correctly. All companies are going to have to take on debt at some point. So is SoFi handling its debt correctly? I think so. Personally, I think SoFi is handling its debt correctly. You can see here in quarter 2 of 2023, that is when our overall debt peaked. Since then, they've done a lot of good work on that debt, especially the cost of business debt there. We declined in 2023, and then a massive decline between quarter 4 2023 and quarter 1 2024. So they're handling that debt. Actual long-term debt staying pretty consistent there, down there with that green side of things. But overall debt, they're handling well. I think they're going to continue to handle that well. And so the debt for me is not that much of an issue. I like the way they're handling it, and I think they're going to continue to handle it correctly. Interest rates. That's something we have to talk about for SoFi from a shorter term growth perspective. We're not talking about 25, 50 years when we're talking about interest rates. We're talking about end of this year, next year. Because interest rates, we don't know exactly when they're going to start to come down. It could be, end of 2024. It could be beginning of 2025. It could be mid-2025 for all we know. They haven't given us a concrete answer on that, and don't expect one until they actually begin to lower the rates. People will want loans when rates start to come down. Simple supply and demand, demand principles indicate that when rates come down, more people will want a loan. SoFi is building its user base. They're getting new members at a very fast rate. When rates come down, those members, users, whatever you want to call them, might possibly look towards getting a loan. SoFi might attract new customers who want a loan with a lower rate than we've seen in the recent years. That will be a positive thing for SoFi. Money flow. It'll be positive. Overall, that will be a great thing for SoFi, attracting new members, getting their loan business to continue growing. So when rates come down, that could be a short-term catalyst for SoFi growth. So we're talking end of 2024, beginning of 2025, mid-2025. That's what I'm talking about there. That makes me think entry might need to be sooner than later if you're a bull on SoFi, which, I mean, I think the overall thoughts on this from my perspective are I'm pretty bullish on SoFi. And I'm going to tell you exactly my levels that I'd add on at the end of this. But first, back to the rates for a half second here. I think I want to be in this when rates are topped. I think I want to be in this while rates are high and ride this as they lower rates and people look for loans. So add in, the fact that within the next year, we have a catalyst due to the rate declines we're expected to see. Add into this their revenue stair-stepping. Add into this their members increasing. Add into this the fact that they're handling their debt well. Add into this that they're looking to become a profitable company and they're showing all the signs that they're going to be profitable soon. I'm a bull on SoFi. I think the biggest bear case here is that they're trying to break into a very tough industry to break into historically. The banking industry, there's going to be a lot of hyenas trying to rip their arms off and their legs off and hold them down, manipulate their stock, make them fail. There's going to be a lot of old money against SoFi. There's going to be a lot of old money wanting SoFi to fail. There's going to be a lot of brick and mortar money wanting SoFi to fail. I think their product is too good. I think the growth they're indicating is too good for them to fail. They could, and I could eat my words. I've been wrong before. I will be wrong again in the future. But SoFi is such a low-risk, high-reward tech play. I love it. I love almost every single aspect. There's small things I don't like, but I love most aspects of SoFi. I think that they're going to be a player for long term here. I think, as I was talking about earlier, those young people who are looking to just have convenience on their phone, bank on their phone, are going to run to this. You can invest on this. You can bank on this. You can get loans on this. You can get cards on this. It's everything that you need to manage your own money. And I think that young people continue to grow this thing. Brick and mortars are gonna try to emulate SoFi, but SoFi is already there. And that's the thing that I think is going to be big for SoFi, is they've been ahead of the curve. The banking industry, they've been ahead of the banking industry moving towards the tech side of things, moving towards the convenience side of things. That's my biggest bull case on SoFi. So let's talk about ad levels here. And I've already added some. 780s was kind of the area that I thought was a good first ad. $7 was where I liked a second ad. 620s was where I liked another ad level. And then 550 was another ad level that I really, really liked for SoFi. Those are the four that I think you can feel confident adding long term in. There's another opportunity here that I do want to talk about, and that is kind of the rinse repeat range trade that you could do while invested in SoFi. If you want to invest in SoFi, say you get like you buy right now, 675 average on SoFi, you're invested. You could trade around that core because this thing has commonly popped from this, $6 level, 6 to 7. People buy the 6 to 7 level, it's popped to $8, $9, $10. You could sell 8, 9, 10, sell a portion of your shares, look to buy them back at $6.95. After doing that a couple times, you're going to have some free riding shares. Anyways, you don't have to do that. That's just an idea I was talking about. You could just invest in this and wait 10 years and see where the fuck this thing is. But I want to kind of repeat, guys, this is a low risk, high speculation play. So there's a lot of things, members are going to increase. Rates coming down is going to cause more people to come and look for loans. Those things are likely to happen. Nothing is ever for certain, though. So this is a speculative play. It's a cheap stock right now, $6.75 a share. This thing is low. It's kind of one of those where it could be a 10 bagger in the future. Could also go to $5 and never really move. $4 and never really move. So low risk, high reward in my opinion, especially with that cash per share and book per share. Sitting not that far below current price. I'm long SoFi. I'm a bull on SoFi. I hope this video helped you kind of get a surface level look into SoFi, the fundamentals of SoFi, why I like SoFi, and the chart of SoFi, some entry levels. Thank you guys for watching. This thing went a little bit long. I got a little rambly. I got a little excited about SoFi. But anyways, thank you guys for watching. Have a great week, and let me know your thoughts on SoFi below.